Hey traders, Raghi here, and there's been a recurring theme in these free videos, and one of the things I want to recap is the concept of what we can do with this volume weighted average price. I've been talking about using it as a sentiment indicator. I just don't want to put it out there conceptually. I really want to give you some tactics around this that you can put to work. And if nothing else, look, there's a couple aspects to trading that every trader really has to master. I mean, I think timing is probably the most difficult. But here's the thing, if you can actually understand the direction in a way that at least keeps you looking in the long or short at the right time, timing isn't as important. And it's still super important, right? No doubt. But the importance of having that perfect timing can be a little bit offset if you get your direction right. And that's what this sentiment and using the middle line, or this sentiment line as we call it, of the volume weighted average price is all about. So let's talk about today, okay? And let's talk about the most difficult part of today, right? I could talk about the early part of today, but let's talk about the most volatile part, because if we can make sense of these things during extreme volatility, imagine what happens when the price action starts to get a little bit normal. In the premium video, I'll talk a lot more about what's creating this volatility, but needless to say, let's just keep in mind that a lot of this is end of year pension rebalancing. This is something we see every year, but why is it so dramatic this year? Well, when you look at the asset class blends that these pensions have, and they see what's happening to their more cyclical and high beta names, and they're seeing what's happening with their low beta names, what they're seeing with their more secular names, what they're seeing happen with dollar and bond positions, they're going to look at the outlook for 2019. They're going to look at their performance for the last quarter of the year and say, we need to shake some things up in a way that we haven't done in a while. And I think that's also a big part of the kind of cash that we're seeing deployed into the market as we wind down 2018. All right, so let's talk about the volume weighted average price and some of the concepts that we've discussed throughout the week. Number one, when we look at an initial break, that is not when we are looking to get long. Again, let me just mention, we are not looking to get long on the initial break of the volume weighted average price sentiment line. We're actually looking for a retest. That's how we confirm that that line is now acting as support. We look for a retest. Now, it could be a retest of the volume weighted average price or the expected price movement range. Now, some of you might be aware of the historical and volatility study that I use to understand where support and resistance can be based upon the price rhythm of the market, based upon the time of day, but that's going to factor in really heavily to this. But here's the thing. Once this market establishes itself, and here's your retest right there, by the way. Once this market establishes itself on the top end of this sentiment line, the value of having a bias, in other words, rather than at all times being open to longs and shorts, which I think is a very difficult way to trade, okay, rather than being open to both, you eliminate the possibility and you focus purely on, in this case, above the sentiment line, longs only, so that each pullback becomes a really simple pullback buy, which is something we did shortly after 2:15 Eastern, right? Now, how do you know it's over? Well, this is where the wave is really helpful. Once we break this line, once we stop printing all these green grab candles, even the blues are okay, but once we go red, the sentiment has shifted. The momentum is likely then to shift as well. And as the market sold off, we actually had one more opportunity to play a bounce into the volume weighted average price, which was right there. That was the buy. Market rallied up into this area here. By the way, gang, that was about a 15-point bounce. It wasn't a small bounce. And then the market broke this level, right? Now, you might have tried to buy this one more time. Let's be straight up here. I'm not going to tell you there's no losses here. Of course there are going to be some. Market tried to test this, didn't bounce this time. In fact, what did it do? Got below, all right, and then we wait for the test. There it is. There at approximately 325 is your retest, and this says, you know what? The buys aren't valid anymore. In fact, we are now on the bearish side of this sentiment line, and then now what do? Again, bias comes into play again. Now it's shorts only. Now it's shorts only. And again, knowing that all you're looking for is shorts into rallies, shorts into resistance, makes life so much easier, rather than asking yourself, oh, do I try to pick a bottom and buy? Nope, you just try to find out where the resistance levels, the retracements are going to happen, and you short. So I hope this was helpful. This is what happened just a few hours ago. And again, think about which end of the sentiment you're on. This is a 1-minute chart, very twitchy stuff, not for everybody, high frequency of trades. You've got to be very, very disciplined, but it's a fantastic way to keep a bias, know if you're looking for longs, know if you're looking for shorts, and having a very clear way to undo one sentiment and then embrace the next. Have a terrific weekend, and I'll see you in the next update.